Hello, friends. This is Dr. Shashi Aggarwal. I welcome you all. Today, our subject is financial planning, and here we are going to do introduction to the financial planning. Here we are going to understand what is the meaning of financial planning, because financial planning is the planning of finance. Here we are going to understand the financial planning at the individual level as well as at the business level. What is the importance and what are the various types of the financial planning? If you find my video useful, please do like it, share it, and also subscribe my channel Shashi Aggarwal. So before moving to the topic, this is my app, which is available at Google Play Store. Link I will be sharing the description box. This app is relevant for commerce, economics, and management students. Lots of free study material related to commerce, economics, and management that is available at my app. Even the structured courses at very nominal price, they are also available. Even the fundamental of investment, or we could call it SAP, that is also available. Link of that course I will be sharing in the description box. So, what is the meaning of financial planning? When we talk about the financial planning, the simple, the word which it is the planning of finance. It is the step by step approach to meet one's life goals. What are our life goals? Whatever our short term goals, whatever our long term goals, like the parents, they have to plan their children's education, their marriage, their even they have to think about themselves also, like the retirement, even if they want to go on some holiday plans. So it is the systematic approach to meet one's life goals. It acts as a guide as we go through life journey. When we make financial planning, we are aware of our income, we are aware of our expenditure, we are also aware how much surplus we are going to have and what are the avenues where we are going to invest. Financial planning focuses on identification of our goals and how we are going to how we are going to put our surplus funds into different avenues and how we are going to manage our portfolio. Because when we do the financial planning, so the objective is to minimize the risk and maximize the return. So we want to diversify our investment. So we do portfolio management. So we are investing in diverse assets. So we could minimize the risk and appreciate our income. Financial planning involves estimating the amount of capital to be raised, determining the pattern of financing, formulating the financial policies and procedure for procurement, allocation, and effective utilization of funds. When we talk about financial planning at business level, first of all, we are concerned how much capital we require. So, what could be the pattern of finance? How much we have to raise the funds to debt? How much the funds we have to raise to equity? So, we will be making the financial policies for getting the funds. How we are going to use that funds so that there should be optimum utilization of the funds. So this is the definition, Gerstenberg, determining the amount of capital which is needed by a concern to carry out its operation smoothly, that is the capitalization, and then the determination of the pattern of the security to be issued by the company in order to ensure the availability of required funds, that is the capital structure, how much debt and equity, determining the suitable policy for the proper utilization and administration of the capital, that is the asset management. So, objective when we are making a financial planning at business level. So, at first of all, we have to understand how much total capital we require, how much capital is required for fixed capital, as the fixed capital will create productive capacity, and how much we require funds for working capital, that is to day running of the business. Then we have to understand the various sources through which we could raise the funds. We have to understand a proper debt equity mix. And here we are also concerned raising of the funds at the right time at the lowest possible cost, and also raising of the funds to maintain the adequate liquidity, and also allocation of the funds in different avenues So there should be optimum utilization of the funds. So what is the importance of financial planning? Ensuring availability of funds at the right time, at the right place, helps in ensuring a reasonable balance between the outflow and inflow of the funds. Because when we do financial planning, so we are concerned about what are the areas, what are the avenues from which we are going to receive the funds. So what are the areas where we are going to spend. So we are aware of our expenditure as well as of the receipts. So here we are going to invest our surplus funds in the sound companies which will generate us revenue. And it will also help in making growth and expansion programs which will be facilitating our long run survival of the business. And it also reduces uncertainty with regard to the changing market trends. It also helps in reducing the uncertainty which could be hindrance to the growth. So what is the need? Because we require financial planning because we want to generate some income, and we are also aware this is our expenditure, this is our outflow, these are the areas in which we have to make expenditure, these are the area from which we are going to receive the funds, this much of the surplus funds, and we want to appreciate our capital. Even if we are making financial planning at individual level, so we are concerned about the family security. So we are going to make the investment in such a manner that it will generate sufficient revenue and it will also reduce uncertainties. And we want to make financial planning so we could have a better and qualitative standard of living. We want to understand the management of finance. So what are the options which are available in which we could generate the, which we could invest and generate the income? How we are going to make use of our salary? Because every individual, every business is different. So they require financial planning according to their objective. So there will be customized plans as per the requirement of the investor. So what are the various types of financial planning? Cash flow planning. First thing that should be done prior to starting an investment exercise. Before making investment, we should be aware of our inflow and outflow. Cash flow planning refer to find out the process of identifying the major expenditure in the present as well as in the future. So we should be aware these are our expenditure, these are our income, this could be the saving, and that could be invested. So we should make investment in a planned manner. Retirement planning. Retirement planning means preparing for future life so that one continue to meet all goals and dreams independently. Definitely here we are concerned how we are going to spend our life after retirement. So here we are making planning. We are investing so that we should have a quality of life after retirements. So setting the retirement goals, estimating the amount of money and investing to grow retirement saving. Investment planning. Saving and investment, they are two separate activities. Investment planning deals with the kind of the instrument an individual should invest in to get the best out of his wealth. The first part of planning, prepare your risk and return profile. Like we have to assess how much risk we could take. What are our expectation? How much return we want? This is where one sets the limits in terms of the risk one is willing to take and minimum return one expects. Because at the middle aged level we are concerned about more safety and more uh, we want to invest in those areas where the safety of fund is very important. Like at the younger level we could take more risk, so first we have to prepare our risk and return the profile, how much risk we could take and what is our expectation of the return. Because if we are want to generate more return, then definitely we have to take the risk. Tax planning. Because one can reduce tax liability by planning effectively. With proper tax planning, we could increase our income after tax planning. Tax planning should be essential part of an individual investor's financial plan. Here we have to see what are the exemptions, what are the rebates which are available under tax planning. so we could reduce our tax liability and maximizing the ability to contribute to retirement planning. That is the crucial for success. Children's future planning. The primary purpose of children's future planning is to develop accurate financial needs by drawing a guide map of all the expenditure we could foresee, which we could predict, including higher education and several other expenses which might arise in the coming years. So, it will be able to provide an adequate security cover during the growing years of the children for ensuring adequate funds for one's child's education. The parents they have to save and they have to invest systematically at the regular interval, so they should have the reasonable funds during when the need arises. Estate planning. Everyone acquire a considerable amount of real estate during his lifetime. In case of death or during lifetime, this could be transferred to either legal heir or to the institution or charity. So here, planning this transfer is the most efficient way is termed as estate planning. Insurance planning. Insurance planning help you provide a safety net that can come handy in time of trouble. This type of planning is concerned with ensuring adequate coverage against the insurable terms. So, under the insurance planning, you could have a life insurance policy, you could have term plans, you could have medical and medical insurance. Calculating the right level of risk covers the required considerable expertise. So, thank you for watching.